Good day traders, Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we reflect on the past trading week and form some views and perspectives on what we think the market's going to be doing over the coming days and weeks. But of a special thing we're doing today and for the next couple of weeks. What I'm going to do is I'm going to open our daily trade signals report, the one that we send out, or the video that we send out every day, to our weekly subscribers as well. I'm going to do that for about 2 weeks, just to give you guys a feel for not only what we share in our weekly perspectives report and the kind of analysis we do there, but also, some of the more detailed analysis and potential trading ideas that we flag to our daily subscribers when we do our daily report. So for those of you who are already on our subscription list, that's great. You'll just get the daily report. For those of you who are not, what I suggest you do is pop over to our website. That's www.underdoginvestments.co.za. Click on this free training tab over here, and what you'll find is some few free trading videos if you haven't gone through them already over here. But more importantly, what I want you to do is actually just sign up to our free weekly perspectives newsletter right here, into your email address, name, etc. That'll send me a confirmation, and I can then add you to that weekly perspectives mailing list. No spam going to be going out. What I'll do is you'll basically receive the weekly perspectives report, and as I said, for the next 2 weeks you'll also receive a free daily trade signals report. So without further ado, let's jump into analysis of the market. And what I wanted to start off with was actually an intraday chart. There's a 15-minute chart of the top 40 up on the screen, and our daily subscribers would be familiar with this, because what I've been highlighting for the past week or so was really this range-bound business that's been happening over here. And it's been a fairly messy from a price structure point of view, putting in higher highs and then lower lows, and then just generally chopping around. And it would have made last week an especially difficult trading week for intraday traders, because you would have been caught up in a lot of this choppiness. Try to get onto continuation moves only to see the market roll down, stop you out, and then continue in your direction. And then if you try to get onto that counter trend move, it would just push up to the top of the range and then roll to the downside. Even range bound traders, it's not a smooth trading range. It doesn't really go up, tap a particular level, and then roll to the downside. Instead, it chops up between these higher highs, between these lower lows, and just churn sideways, making it exceptionally difficult, especially if you're a trend continuation trader. What's worth noting is that on Thursday, into the close of the day, we actually saw a breakout of this, call it this range, this choppy trading structure. And notice immediately, once we break out of these ranges, we immediately push up to a high. We do a retracement. We're now pushing up to a higher high. Notice the much cleaner price structure once we get out of these choppy trading conditions. And you can go back in these charts and you can actually see those specific areas where we enter these sideways consolidation moves before we find a particular direction, be that a roll down to the downside or a continuation move to the upside. So certainly intraday traders should be breathing a bit of a sigh of relief in terms of what's happened over here. Now we've had this breakout to the upside. It does look like the market is in continuation mode on an intraday basis, and we're actually approaching this 50,000 level over here. Astonishing to think about it, given the past few years trading activity, but here we are. We're pushing up towards this 50,000 level on the top 40, and it'll be interesting to see if we can tap in at those levels today or in the next couple of days. But certainly the trend is to the upside at the moment. So that's what's happening on an intraday basis. If I were to draw out a bit, and let's have a look at the daily chart of the top 40, and really it's still a completely bullish trading action. We're pushing to the upside. We're putting in these higher highs. We're putting in these, as I've noted to you, we're putting in these all-time highs at the moment. So very, very bullish trading action. Stochastic, yes, it's overbought, but as I've mentioned many times in the past, stochastics can stay overbought for extended periods of time. And really, one of the things we've also been highlighting is that this has just been a very listless sideways stochastic activity that we've been, and it really speaks to some of the sideways action we've seen in the past week or so, playing out on an intraday basis. But at the moment, things remain bullish. We continue to push to the upside. And one of the things we've been highlighting again and again is that we can continue to push to the upside. So when you have potential retracement conditions, let's highlight what are those. So for example, an overbought stochastic with a potential reversal candle, boom, look there. Let's have a look there, another one, potential reversal candle, stochastic rolling to the downside. There's another one over there, stochastic fairly overbought, candle closing in the lower part of or very close to its intraday lows. Those, while they can be indicative of potential retracements, you have to wait until you see what the market does. The market needs to confirm what it's going to do. It's got to give you some form of corroboration before you try and get short. A lot of traders, I think, have been caught to the short side, trying to catch this counter trend retracement over here that you've been expecting and anticipating, because really this market's run so hard for so long that it needs to come back. Point I make over and over again, that the market doesn't need to do anything. The market simply does, and especially as trend traders for the most part, but also as retail traders, let's put it that way rather. What we want to be doing is we want to be waiting until the market confirms to us what it intends to do. Our job as a retail trader is not to try and be the first movers in a particular direction. We don't want to catch the whole trend. We don't want to be the guys that buy over here and then sell wherever this market's going to start its retracement. We want to be the traders that catch the in-between moves. Our edge is not in catching the extreme. Our edge is in taking small bites out of bigger trends. So have patience, I suppose, is the message I'm trying to put out today. Wait and see what the market does. Sure, we think the market's going to start a retracement, but then wait until the retracement starts. Wait until it confirms. Give it a day, give it a couple of days to see what happens as it pulls back before you try and get involved. And that's regardless of the kind of trading systems that you're using. Obviously, when you move to different time frames, you do different kinds of analyses, but certainly on the daily, this is what we're seeing. We're seeing very, very bullish trading action, and we're going to wait and see. And perhaps the market taps in at the 50,000 level, and then we see some form of retracement playing out. Let's wait and see. Meanwhile, on the volatility front, we continue to see this drop off in volatility, which we've expected. We've pretty much expected that, given that we're moving into that time of the year when volatility historically drops off. It's dropped off fairly sharply. Going to be interesting to see if we visit these volatility lows here of the end of May. Hopefully not, because a lot of this drop off in volatility over the whole of July and into August now has really contributed to it makes it difficult from a trend trading perspective to get any particular get involved in terms of a directional bias and then ride trends, because the trends just aren't there to be ridden. So we do expect this volatility drop-off to continue, and hopefully then towards the end of August, as we go into September, as things start resuming, people come back from holiday in the Northern Hemisphere, we expect volatility to tick up again, and that's really when we want to get involved in the markets. And so one of the things we've done in our own trading room, and we've encouraged it to our daily subscribers as well, is, especially last month, this month, focus on where you got this reducing volatility. Trade smaller, or if you want, take a holiday, don't trade at all, step away from the markets. Markets will always be here, opportunities will always be here for you, but if you do want to trade smaller, take smaller sizes. And I think our daily subscribers would have seen that as well in terms of even our HA system. We're in a bit of a drawdown now in terms of those intraday trade signals. And the reason we fine with that, and we maintain our disciplines in terms of applying and trading those systems, is that we've actually reduced our position sizes because of this falling volatility. So that's something to think about in your own trading as well, is when you've got these conditions, when the markets are thin, rather either step aside or actually just take smaller position sizes in terms of your money management or your risk management methodologies. So that's what's happening on the top 40 price structure perspective. Still bullish, but certainly again, I make the point that you need to wait until see what the market does, but one would expect at some point that the retracement will start materializing. If we then switch over to let's just see some of our international markets, see what's happening on that front. Let's kick off with the S&P. So here you've got the S&P again putting in this, let's zoom out a bit, putting in these higher highs, higher lows, so nice bullish trend in place. Notice how the market, let me just delete this and show you, the market pushed up to the upside, and off this last leg of the move to the upside, just get our Fibonacci extension tool in play over here. Notice how the market pushed up into that 127.2, and then sort of, it's just been chopping sideways to a large extent over here. In so much as we are eyeballing our 50,000 level on the top 40, we're also eyeballing this 2,500 level on the S&P, which more or less lines up with the 141.4 extension of this last leg of the move. It's looking bullish on the day. There's a 24-hour chart of the S&P. So again, it sort of aligns itself with our own market in terms of an expectation of a potential move towards that 2,500 level, and then maybe a potential retracement playing out. But again, that's the maybe. Let's wait and see what this market does. But S&P looking bullish. Let's have a look at what's happening on the FTSE. FTSE looking a bit, it's quite choppy actually, It's pushing the upside, puts in these high highs, then puts in a lower high, lower low, break structure to the downside if you're trading on the shorter time frames, and now it's rallying to the upside again. I mean, there's a couple of ways to look at this market. If you look at this leg of the move here, you could look at this as a nice strong impulse leg to the upside, in which case all we've got here is this complex retracement, and we're putting in a continuation move to the upside over here. Key levels to watch are if we start breaking and closing above this 7,600 level over here. We can see the market doing that. It's about 70-80 points off that levels at the moment. That would be quite bullish. Otherwise, expect a bit of choppy action to continue. It is short-term bullish at the moment. So let's have a look at what's happening on the FTSE. The DAX looking well, it's actually it's looking quite bearish, because what we got is we had that break of structure, retracement, continuation, move to the downside happening over there. Nice looking chart from a price structure perspective, because it's clean, clean breaks and continuations happening. If we look at where it is now, it looks to be in a retracement to the upside. It's retraced back into this previous price structure over here. So if you're a trend continuation trader, you might be eyeballing either the 38.2 or deeper, and looking for some kind of a continuation confirmation to the downside to see this market rolling over. So short term bullish, but it's certainly in that's in the form of a retracement, and we do expect at some point again for this market to continue to the downside in the direction of the prevailing trend. If you look at the big performer was always been the Hang Seng this year. Let's pull that up. Yeah, it's pretty much continuing. Nothing much to report here. This market just continues to push to the upside, putting in higher highs and higher lows. Very strong trending market at the moment. Let's have a look at the Rand dollar exchange rate, the other big influencer in our local market. Point we've highlighted, we had this deep retracement over here, and then we had this continuation move to the upside playing out. We're nearly revisiting these previous swing highs over here, so this will certainly be the levels that we either expect the market to put in some form of consolidation, or if it does break to the upside, if we see a move beyond this 1360, call it 1365 levels, then we certainly expect a further weakening of the currency, and that will really bolster our local top 40 as well. So good trend continuation moves happening on the rand dollar. And lastly, let's look at gold. So spot gold, we put in this lower low over here on this last leg of the move. Then we had this retracement all the way back up into the zone between the 61.8 and the 78.6, and then the market looks to be at this stage continuing to the downside. So not a bad spot, and you see we highlight a few symbols over here. Not a bad spot to try and get short gold, especially if the market continues to the upside, but keep an eye on things. As I said, the market's reaching a point that the equity side of things is reaching a point that we could be topping out, in which case we could see a bit of risk off and we could see gold rallying. But at the moment, structurally, gold has put in a nice retracement back into this level and looks to be continuing to the downside at the moment. So putting all of these things together in terms of what we're certainly seeing some continued upside at the moment. We expect the market to continue to push in the short term. Whether or not we start to see some form of consolidation, that's anybody's guess. I could have started at the beginning of last week and made the same comment and said, look, we expect some form of consolidation to play out before the end of the week. We simply don't know. This market could continue to push up. Shorts could continue to get squeezed as we move up to the upside. Again, reiterate the point. Wait for the market to confirm which way it's going and trade very, very small if you're going to be in current market conditions. Guys, that's pretty much it from this side for the weekly perspectives report, and I shall speak to all of you, including our weekly subscribers, as I said, in our next daily trade signals report. All the best in your trading. Cheers.